And gentlemen, we're back with the end of day pulse wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from Pulse Wave Trading, home of the world famous Pulse Wave Price Trigger Reports. All right, tonight, this is Tuesday, June 13th, 2023. We have a lot to go over, so I will not be taking any requests today. The only request we're dealing with is some questions that arise out of the trading room, and we're going to tackle those with the charts. And let's just jump right into it. All right. So the questions that came out of the trading room was, why is it that we know, according to everything that's going on, the markets should be falling apart, but instead they're going higher, and they will not. It's like they're not being allowed to drop. And when they do, it's very little, then the market comes right back up again. This is classic interventionalism 101. It is a political agenda where the Federal Reserve needs to at least make it look like that everything's in recovery and that we're not in a recession and that we will not be going into a recession. While all the very smart people out there are saying, or have been warning and saying this is not a good thing. They need to let nature take its course. They need to let the free market be the free market instead of an interventionist market. So, what the Fed has chosen to do is inflate its way out of inflation. That's the solution that the geniuses at the Reserve have come up with, and that they're going to inflate their way out of inflation. What do you mean? Well, instead of inflating everything outside of the stock market, they decided we're just going to hyperinflate the stock market. We're going to hyperinflate asset prices. So the Federal Reserve is buying up futures and shares and equities and propping it up. And they're convincing everyone that everything is good. There's nothing to worry about. So what you're going to end up seeing is that that's just like in the Lord of the Rings. Remember when Gandalf faced the White Wizard? And the White Wizard said to Gandalf, "You have chosen the way of pain." Well, that's what the monetary system, those who regulate the monetary system, have chosen. They've chosen the way of pain. Had they allowed the price action to have free discovery, the markets would have, dropped sharply, but we would already be in recovery by now. All right. We would have hit 52-week lows, and then the market would have came right back off of it. But instead, they are prolonging things like they've been doing for the last 2 decades. The government officials believe that if they can just keep kicking the can down the road and keep hyperinflating asset prices, that over the long term, everything will be just fine. And nothing could be further from the truth. The longer they delay, the worse it is going to be. So now the market is going to have a higher price to fall from. I've been warning, and I'm still warning, because of what they have done. Once the markets do fall, they're going to fall well below where they should have bottomed out at. Ladies and gentlemen, you're going to see the stock market take out the 2009 lows. It's going to be worse than the financial crisis, worse than the Great Depression, worse than the May flash crash of 2010, worse than the crash of 87. This is going to be monumental. This is going to be worse than the tech bubble that bursted in 2000. This is going to be a historic event, and there's nothing that anyone's going to be able to do to stop it. So, okay, as an investor, as a trader, you play the game. They want to hyperinflate asset prices. Okay, fine. We'll just be on the long side and keep buying on the way up. But I'm telling you, when the rug gets pulled out It's going to be so fast and furious to the downside, people are going to be at a loss for words to try to explain it. But see, the pulse waves tell you when things are going to happen. And all you have to do is follow it. That's it. Case in point, this is the Bitcoin futures chart right here. Now, you see the number sevens, right? The red 7, green 7. Those are primary rally alerts, okay? There's several rally and crash alerts, but that's the primary one, the sevens here, all right? The secondary ones are the positive and negative bot checks, these green dots and the red dots. Those are the primary signals in the pulse wave system that alert you when there's about to be a major algo shift, when the computers, the machines are done selling and are ready to start buying, or when they're done buying and now they're ready to start selling. It will warn you, give you a heads up. These alerts tend to lead the market 3 to 5 days out. Sometimes it's immediate. A lot of the time it's immediate. So we're not at a loss when these things happen, when these things occur. You have 3 different types of markets. The first type of a market is a bull market. That's when asset prices continue to run and run and run to higher prices. The next market you have is a bear market, when the prices continue to fall and fall and fall and fall. And then the third and final market is your consolidation or congested market. That's when the market is range bound and extremely choppy. All right. So you basically need 3 different methodologies, 3 different systems running to take advantage of it. You can't use the choppy market methodology when it's in a bull market. You can't use that methodology when it's in a bear market. You can't trade like it's a bull market trending in a consolidated environment. You can't treat the market like it's a bear market in a consolidated environment. A consolidated environment is just that, a consolidated environment. And different strategies need to be employed. That's why I always say in the videos that it takes patience. Sometimes you have to set in a position for a minute. And when you're doing that, you see the market go against you, and psychologically, it can be rough on you. But you got to stay the course, because the markets do move in their course. Now, I taught you guys weeks ago about the trend momentum indicators. See this green line? That's a bullish trend momentum indicator. See the red line? That's a bearish trend momentum indicator. When you see this, that means that every dip and pullback, the market's going to get bought. All right, this is a bullish trend momentum reading. And a bearish trend momentum reading, every rally, every upsurge and swing is going to be sold. All right, and then once that trend momentum shifts, then the algo shifts to buy. And after it's finished buying, it shifts to selling. After it shifts from selling, then it goes back to buying again. And within the trend momentum process, there are also 3 market conditions. You got the bullish market condition, you got the bearish market condition, and then you have the neutralized market condition. All right, so when the markets are consolidating, all right, that's this blue. All right. So when that happens, sometimes it can just be a day or two. Sometimes it can last for a long time. It just depends on the situation. Back here, it's what's this, 2 weeks right here when we had a consolidated environment. It lasted for 2 whole weeks. All right. So sometimes you have to just sit and wait for the trend momentum to change. And then that's when you change your strategy. It's just how that works. All right. You look at the trend momentum readings. The trend momentum readings tell you everything you need to know. All right. So in this case, looking at this Bitcoin futures chart, we got a rally alert, and the market just came off of trend momentum neutralized. So tonight into tomorrow is a buy signal for the Bitcoin futures. All right, because you got a rally alert. And isn't it interesting that you had it right here at the bottom of the trading range because you're in the Kumo cloud, so you're consolidated within here, and then you get the rally alert. All right, so it's very simple to see that, right? Now, you may want to know, well, when is this, Bitcoin going to do anything? Well, just remember now, you got a major shakeup happening in the crypto world where the SEC is going after all the crypto firms, all the exchanges to do business in the US. They're trying to make it impossible, make it hard, make it difficult because the government wants a bigger piece of the cut. The government wants to control the market, a market that was designed and developed to have nothing to do with the government. Now the government wants to rein it in and make it a part of something that is regulated by the government. So here you are here. This is GBTC. Looking at the GBTC, it looks quite different than the Bitcoin futures. And this is supposed to be tracking. It's the ETF that tracks the Bitcoin. But as you can see here, it hasn't been really doing anything. And this used to be a go-go gadget type of a security. It used to run, it used to explode. Can you believe we're trading at $13 a share when there was a time where this thing was at $3,000 a share? Yes, there were mornings where this market, because it didn't have any extended hours trading or pre-market trading. So the market was extremely dangerous and volatile, where you could wake up and the market has now opening up $700 higher or down $700 from where it closed the night before. So it was just a wild, wild thing. And as you can see here, it's been very, 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 very tame. And we have this bearish trend momentum reading, which means that every little attempt at a rally, GBTC is selling off, is being sold. And you can see time and time again these examples in the stock market. Now, I'm going to show you something, a little word of caution here. All right, so going to the S&P 500. Now, we talked about this gap, and you've had back-to-back 3 days of hitting new 52-week highs in the S&P 500. And the gap has not even been attempted to be closed yet. Now, that should be a warning sign to a lot of people, especially going into tomorrow's FOMC. Now, here's the SPY, which is the ETF equivalent of the S&P 500 futures. Now, I want to show you something here. All right. You don't see that gap up like you did in the futures. Very interesting. And that's because of the contract rollover. See, the futures rolled over from June to September now. We're in the September contract. All right. Now, back here, let's see, close. Let's see, you got up to 422.92. All right. So you gapped up over $1 from the day before. Okay. This one, we'll see, 423.95. Yeah. So you gapped up over $1 from June the 2nd from the close on June the 1st. And the market did not do anything to fill that gap at all. It just took off. All right. So just showing you little things here. So you see the thing in the futures. And then if we go back further, ladies and gentlemen, this is what should catch your eye. All right. This is going to happen. If you walk over here with me to March the 29th of this year, all right, the market gapped up. The market closed on March the 28th at 395.60 and opened at 399.92. Gap has not been back and filled since March. Since March. And not only did the market gap up, but then you got a rally alert when it did it and said this thing wants to head higher, and it did it again. The market has not even tried to pull back and correct and fill that gap. Not even once. This is a controlled environment. They don't want the market to fall. Not just yet. because they need it to score political points. But mark my words, they're going to let it fall. That means the S&P 500, the SPY, all right, the spider, S&P spider, has to fall back below 398, folks, to fill the gap. And we're at 436. The higher it goes, the lower the fall will be. Now, on here, just 2 days ago, market closed at 433.80, right? 433.80. Where did it open? It opened at 435.32. Okay. Has not filled that gap either. So the question is, how is the market able to go higher? And it's supposed to be falling, but it's just not doing it. And well, this is how. These are the mechanics of the situation. All right. This is a good question. Matthew says, curious if you still believe GameStop will go back up and take out the bullish pointer back when it hit that all-time high. All right, now that's a good question. That's a very, very, very good question. And it's right in the flow of the example of what we've been talking about. So let me just pull that up and let's take a look at what we got here, because remember, all gaps and pointers must be reconciled eventually. The markets can go a very long time without doing it, but eventually they do it. It doesn't have to make sense either. That's the thing about it. All right, so if we blow this up a little bit and then go back, I know it's back here somewhere. Ah, here we go. All right. Make this a little bit better to see. All right. The famous bullish pointer right here. This is $120. And it looks like they've done some rebalancing here. Let me fix this. Let me go back. Let me pull up a weekly chart. See if we can get the data right. All right. Okay. Someone let me know in the live chat. Did they do a stock split or something, or a reverse split, or some kind of, they did something, because the GameStop, the stock went to like $500 or something like that. But this is showing $120.75 on January the 29th of 2021. So there must have been some kind of split or reverse split or something. All right. So yeah, this is a bullish pointer from 2021. And that's $120.75 a share. All right. So let's go forward now. And you can see we're nowhere near there. I believe that if the company, continues to survive like it has, then yeah, I think the market is going to do that. I really do. I think this GameStop, because look, even it's funny now. This is the weekly chart. So far on the weekly, it looks like it may be starting to give you a rally alert there. But let me go back to this daily now. So yeah, that's a bullish pointer. At some point, it's going to need to be tested and taken out. It can take a while. I know it can take a long time, but gaps and pointers do get reconciled eventually. And look, it gapped up again today. Look at that. It gapped up today. It opened at $26.20 after closing at $24.30. So that's another gap. It may even get filled tomorrow. And then it gapped down. So all it did is come back here and fill this gap, close this gap. But now you made a gap on the way up here. So I don't think it's ready to do anything just yet. You gapped up here. Market took its time, but then came down here and closed it. Gaps always have to be closed, man. So yeah, I don't know how long it's going to take, but eventually it's going to happen. Now, because of this, it makes you think now that maybe the Fed will be successful in elevating stock prices just a little wee bit longer, long enough for GameStop to take out the bullish pointer, and then the markets can do what they do at that time. So yeah, that was a good example. I'm glad we pulled that one up. So this is where we are, folks, and I want you to see this. All right, now they've also been suppressing the precious metals. They've been doing that forever. Gold should be like $5,000 an ounce based on the realities of the global economy, right? But instead, look at GLD. GLD has really struggled up here. Now it's in a consolidated situation. And look, we got that negative bot check from June the 2nd. So we know the market is about to fall outside of the Kumo cloud and go into a free fall status because we got a negative bot check. So it's gonna be coming here soon. And you got a bearish trend momentum reading to boot. So any crash alert you get in under a bearish trend momentum reading, you better believe something's coming. Now, if you want to look at the last bot checks to see what happened, well, we can just look. All right, so this bot check here. All right, this is from September of last year. It took a while, but then the market gave you a crash alert a few days later, and then the market came down. And as it was falling, you got positive bot checks. So it's letting you know that this is going to be short-lived. Then what did we get? A rally alert, and the market did pop back up. And then you got a negative bot check, and the market fell down. Then you got a positive bot check, and then the market exploded higher. Then you got a negative bot check, and the market did fall. Positive bot check, the market rallied. Another positive bot check, the market rallied some more. Another positive bot check, the market spiked up. And then when it fell and when it gapped down, you got another positive bot check, but the market continued to fall. But because you were under the banner of a bullish trend momentum reading, you eventually got another confirmation rally alert, and then another one, and then the market exploded under the banner of the bullish trend momentum reading, and there you go. Then you got the algo shift from a bullish trend momentum reading to a bearish one with the crash alert, and yes, the down price followed. All right. So where do I think Bitcoin will go this year? I really don't know, because if you take a look at everything, we're not getting a clear picture. We can prognosticate based on what the algo charts are showing. And if you really want to go there, I have to say that it's mixed, because you got a long-term bear market with the Bitcoin. This is a Bitcoin futures chart we went back to. And then you had the intermediate term was also bear. So that was, very bearish. But then something happened. You just crossed now. You just crossed over here. Now the intermediate term is bullish while the long term is still bearish. And you have the bearish trend momentum reading. And now the market just flipped today to a bullish trend momentum reading. You see what I'm saying? So now the market is poised to go higher. I think first the market's going to, unless we flip-flop here, the market should break back above 30,000. All right. So it's just really difficult to say what we're going to do. You can prognosticate, but in this environment, it's tough to say where it's going to go. I can just tell you from day to day, as the price schematics are developing, what the algo chart is saying is next. And right now, the algo chart is saying is next. We're about to have a nice little bull run. All right, we'll see how high the market can get. It does have to overcome a few obstacles. We got a major resistance at the top of the Kumo cloud at 30,000. So at some point, it's going to have to punch through that if it's really going to run. And there's going to have another resistance once we get up there beyond the 30,000. We got another pocket of resistance here. on the way to 35,000. And then when you get up here to 40,000, that's another major resistance. So, and then again up here near 45. So you got walls of resistance along the way. All right. So it's a lot for Bitcoin to overcome. And then you have the regulatory climate when now the US government, by the way of the SEC, is trying to lock everybody up that's operating in Bitcoin and fine them. You know, fines are just shakedowns, mafia style, where the government is shaking a corporation down and saying, look, you made a lot of money and we want a cut. We want a piece of the action. So the United States mafia says you're gonna break us off a piece, and going forward, this is how it's gonna be, and you're going to start engaging in in private information hustling. We want you to take information on every account you have and give it to us and tell us who's making money. We don't care if it's $1. We want to be notified so that we can tax you and tax them. All right. So that's what it is. All right. We are in a weird world right now. We're in Willy Wonka land. All right. Nothing is what it seems. There's always something else going in the background. And make no mistake, folks, you're witnessing the collapse of a world superpower. The USA is on its way out, folks. But nothing happens in a straight line. There's a process. And we're just going through that process. All right, the death throes. So it doesn't look like it's happening as it's happening. It's not until you step outside of it and then you can see it more clearly. But when you're in it, you might not see it. All right, so as far as NVIDIA has the gapage here that it needs to deal with. It has not back and filled the gap from May 25th, which is more important, I should say, way more important. And that's what's going to have to happen. So this market's going to have to correct. And look, it's flip flopping up here, it's struggling, and you just went neutral. This market just got neutralized, and it's going on 2 weeks of neutral of a market in neutral. All right, so I think that this one's about to have a price collapse of at least $50 to come down here and close this gap, maybe even $100 in NVIDIA. So get ready for about $100 correction in NVIDIA. All right, just FYI. And NVIDIA is bullish long term, bullish intermediate term, and you have a bullish trend momentum reading. So it's neutralized now. Now the trend momentum reading is neutralized. We'll see what it looks like when it comes off neutralized, if it'll be locked back in bullish again, or is it going to be red, giving the market the go ahead to come down here and close this gap. So very interesting thing. So definitely when you look at your PulseWave price trigger reports on your dashboard tonight, make sure you pull up the NVIDIA and look at that, because tomorrow's price intraday price inflection points could get all blown out tomorrow based on what happens with the FOMC. And I think they're doing a press conference afterward and some more stuff. So just be ready. Be ready, folks. Be ready. We're in a very weird regulatory environment where the government is fighting tooth and nail to get as much money as it can so that it can fund its abusive spending. It's ridiculous, absurd spending practices. And remember, these are the so-called brightest minds that America has to offer. And these brightest minds that run your government are saying the best way to get out of debt is to create more debt. That the best way to curb deficit spending is with more deficits. The way to fight inflation is with more hyperinflation. That's what they're telling you. That is their financial prescription for what ails the U.S. economy. And it's going to end in absolute calamity, disaster. And this is our opportunity to get rich, to get wealthy off of the USA's mistakes. All right. We're going to capitalize off of their calamity that they're making and off of their mistakes. All right, final question. Will all bot checks occur or some are false signals? I.e., can there be a positive bot check but later be overwritten by a negative bot check? Then we get a negative trend momentum and the stock drops. Okay, that is a very, very good question that Ben is asking. Now, normally I would say, of course, you can never say anything's 100% because there's always that one time something happens and then it's like, okay, all right. So the way, first of all, let me just go back and give you the refresher. Okay, everything that happens in a market, whether it be good or bad, happens with the trend momentum readings. Bullish trend momentum readings will give you positive bot checks and rally alerts. Okay. That's what you get in a bullish trend momentum reading. Under the bearish trend momentum readings, you get crash alerts and negative bot checks. That's the way that works. Can you get alerts outside of that? The answer is yes. Case in point, this is NVIDIA. You're bullish on all the time frames, bullish trend momentum reading, but right here when the market went neutral, you got back-to-back crash alerts. You got back-to-back crash alerts in this neutral environment. And prices did head lower. It didn't like crash, but it did head lower. Then when it came off of neutralize, the trend continued and resumed. And up in here, you're getting crash alerts in a neutralized state. That's why I always say don't worry about trying to trade a neutralized market. Just wait till it comes off neutralized and let the market tell you what it's going to do. Well, if you just go back here, you'll see whenever you saw the bot checks, it's always going to be in the direction of the trend momentum reading. Always. Now here, you had a bearish trend momentum reading and you got a bunch of crash alerts. All right. A bunch of them. And then when it went bullish for a minute, you only got a rally. You got, rally alerts, bearish crash alerts. That's the way that worked and pretty much always has worked. Can something like that happen? Theoretically, it can. It theoretically can happen. All right, I think I found an example that you were talking about. So let's see here. All right, right here. Okay, so here is still looking at NVIDIA. If we go back to November the 1st of 2020 and November the 3rd of 2020 and and December the 31st of 2020, under the auspices of a bull market with a technical bullish trend momentum reading, you did get these negative bot checks and crash alerts and positive bot checks and rally alerts. Do you want to know why that happened? Because you're neutralized. In a neutralized market, yes, it's common to get both long and short signals, positive and negative bot checks. That's why I say do not trade neutralized markets because the market's not going to go anywhere. It's just going to chop around and do absolutely nothing. And there's really not going to be any money on the table for you to make any money. Wait till the market comes off neutralized, then you can make your money. If you try to trade all this here, you would have been like, man, this sucks. This is whack. And rightfully so. But if you were patient, the next day, the day that it came off of neutralized and gave you a rally alert, you were off to the races. See what I'm saying? So in a neutralized environment, yes, you can get both. You can get false signals. You can get negative bot checks and positive bot checks and rally alerts and crash alerts, and they can cancel out each other as they should. That's why it's a neutralized market. That's why when you look at your report, it'll say under the trend momentum reading, it'll say 0. It'll say 0 because you're in a neutralized market. There is no trend momentum reading. You're in a neutralized market. Step aside. All right. And when you're in a bullish trend momentum reading, you'll get positive numbers under the momentum section of the report. And when it's a negative trend momentum reading, a bearish one, you'll get negative numbers. They're always followed by that dash, negative numbers. All right. So that's how you know what you know. All right. So again, the thing I want to leave you with tonight is that everything that happens, every major crash in stock market history happened under the auspices of the appropriate trend momentum reading. Every crash in the market was in a bearish trend momentum reading before the crash even happened and during the crash. Every explosive rally we ever had happened under the auspices of a bullish trend momentum reading before and during the event. Okay? That's why I say we're not kept in the dark. I might not be able to tell you precisely where the market's going to top out or where is it going to bottom out from here, but I can tell you what's happening right now and what the next move is going to be for the next day. That I can tell you with 24 hours in advance. So for NVIDIA, the 24-hour report is that tomorrow this market will do nothing. It's under the neutralized market condition. Even if prices move up or move down or move sideways, at the end of the day, it's still a neutralized market, and we don't touch neutralized markets until it comes off of neutralized. It's just that simple. All right. So hopefully tonight's video was informative and helpful. And tomorrow is the big FOMC, so we'll see how that goes. I might be able to do a live FOMC. We'll see. I'll see how things go and how busy I get, but just be ready because tomorrow is a big day. And most people are, including myself, I'm standing aside until after the report. I'm not trading tonight leading up to that report. I'm waiting until the report comes out, followed by the press conference. I'll wait and let the dust settle, and then I'll be ready to get involved in Wednesday night's market. When the market reopens on Wednesday night, I'll be ready to rock and roll. All right, but until then, mama didn't raise no fool. I ain't stupid. I'm not standing in front of that freight train tomorrow. You don't know what's going to happen. We could have old school school scenario tomorrow where the market punishes you in both directions. People think they smart. Oh, I'm gonna go long or I'm gonna go short, and both people get stopped out. I've seen that happen hundreds of times with these FOMC meetings. So tomorrow's a big day because we're in a very unstable environment. So any report that has a potential to be catastrophic, you stand aside. Don't try to be a maverick. Stand aside. Let the market do what it's going to do. And on that note, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. See y'all tomorrow.